Good evening. This is Michael Filighera. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Thursday, October 7th, 2021. The S&P did continue to move higher today. In fact, it reached up to what I thought could be the top level to complete the minor wave 2 corrective bounce that the market has been tracing out since last Friday. So I've not marked it as the completion point of C, even though we've had a pretty good turn, about a 30 point turn off of that high. But I still like to see 5 waves down. And I may go down to the 30, but I like to see it on the hourly chart to give me confirmation that the move is done, all tied up with a ribbon and a bow, and we're heading lower in a minor third wave, which again is a part of the larger intermediate third wave decline, which has now been in progress from the 44.72 high. That is the completion for intermediate wave 2. So we're in that intermediate third wave. We're looking for that third of the 3 of 3, so minor 3 of intermediate 3, to continue or kickstart and get into gear. So right now it continues to hold right at the hourly 20 moving average. And it needs to break, have a bar close below it, and then maybe start to produce some additional acceleration. So a couple of rounds of acceleration would be good. That'll give extra support to the fact that the minor 2 is complete and we're now in the minor 3 decline. Then it also needs to come down and break below the 50, which is at 43.65, and then the 200, which is at 43.56. So they're not that far apart from one another. And so a good push and a good decline with some follow through in terms of just acceleration could do the trick. And that would likely give us enough confirmation that minor wave 2 is over and the third wave is on. But until that really does occur, I need to leave open the potential that the market could turn once again, rally up, and maybe even get up as high as 4,044. I'm not anticipating that or expecting it, but I think we have to allow for the potential. That would be more prudent, because if we were all set, we're going down, falling off the cliff, and then we come in tomorrow and they're rallying it higher, well, then first of all, I begin to think that people look at me like, well, what are you talking about? So I always try to allow both sides. And that would be the upside picture for right now. I truly don't think that there's a whole lot left to the upside. I believe that now we've lasted Monday, Tuesday, Wednesday, and Thursday, seeing a lot of the funds, new money coming in, fund managers getting prepared for the start of the fourth quarter, et cetera, et cetera. So all of the portfolio adjustments I think have been made, which should last us through the quarter. And all the new money that's coming in, I think, has already now been placed. So back to business, and that business is we're in a bigger, larger correction. And we're going to continue to go down now. So for tomorrow, allow for a continued upside with the possibility that we'll break today's high, which is 44.21.50, and maybe start to reach up towards this next resistance at 44.44. There's not much in terms of price, except right there, which we've already went through and could do again. So the next stronger price resistance really is 44.40 to 44.45, we'll call it. That's where I think the market should meet some stronger resistance. Again, I'm definitely not looking for it to come above 44.72. That would change the picture totally and put it more into that it wasn't the 1-2 on the intermediate level, that it was an AB, and that this is going to be the mark for the C wave. And this is all a part of a B wave that's going to go up. And actually, we would be A and B and we would be in a C wave up. So those are our potentials. Those are our possibilities. We have alternate, we have preferred. The preferred view is that we're in an intermediate third wave, and that inside of that, we've just completed minor wave 2, which was a corrective bounce. And now we're beginning to drop in a minor third wave. Expectations are that acceleration will begin to pick up and that we will likely start to see a stronger drop. That's where I'm going to leave it for right now. Continue to trade smart, continue to trade using moving averages, using the Fibonacci, using the Elliott. Our next update will be on Sunday.